Hey, Bulls and Bears, back with another dose. You're watching Bull, Boom, Bear, Bust, also known as the BX4. My name is JJ. I'm going to be your host. And I've got the headset on today. Obviously, you can see this. Got a little bit of a water intrusion into my garage here. Not flooded, but just a little bit of water intrusion. So we've got some industrial fans going on back there. So hopefully you won't be able to hear it since I've got my headset microphone hooked up here today. So let's go ahead and get right into it. I'm getting messages and questions here and there asking me, hey, when's the pullback? When's the pullback? This market's overheated. The stock market's overheated. When's the pullback? We also see similar questions in the housing market. People thought the housing bubble, so to speak, was going to bust many years ago, and it hasn't. And I've got to remind people from time to time, just because something is overpriced doesn't mean there's going to be a correction. We did see somewhat of a correction, a slight correction in the housing market, but certainly no crash like a lot of people out there had predicted or expected. Why is that? Well, when you have something that makes prices go up, easy money, easy credit, um, and then that continues, that's nothing changes, then you're likely not going to see much of a correction. Now, of course, interest rates went up a lot, mortgage rates went up a lot, so we're seeing somewhat of a correction, but banks are still loaning out money. Remember, in order for prices to come down, you have to have a noticeable change in the amount of money being loaned out. And that's not happening. And the same thing with just the general cost of living. Look at what the credit card companies are doing. They're not cutting credit limits, even though delinquencies are rising, right? So we're going to talk about this and get into some numbers. Another record leap in U.S. credit card debt. We're going to get into that here and a lot more later on in this video. Oh, back on the topic of rain, just for a minute. It's rained, I'd say, here where I'm at about 7 days in a row, which is very unusual. Here in California, we do get rain a lot in January, February, March, especially, but this many days in a row, got flooding going on here in San Diego. It's interesting though, because this summer, are they going to still try to say that we're in a drought? Right? They've been saying we've been in a drought ever since I moved out here like 20 years ago. So we'll see how that goes this summer. But let's get into the financial slash economic news right here. And I wanted to bring up a headline here for you. And I've got a chart here made up for you here. Another record leap in credit card debt. And that's back to the beginning of this video. We talked about why aren't we seeing prices correct? Why aren't markets correcting? The housing market, the stock market. Why are we not seeing crashing prices? If so many people have so much debt, why do we still see prices going up in a lot of areas? It's very strange, right? Well, it's not so strange when you look at it. Banks are still loaning out money, enabling people to go further into debt. And until that stops, you're not going to see inflation slow down. It may slow down, but you're not going to see inflation drop to a deflationary situation. It's just not going to happen. The more people can borrow, the more prices will go up. We'll take a look at this. Average credit card balances jumped 10% to a record $6,360 as of the fourth quarter. So not only are people they're still spending, but credit card companies are not dropping the credit limits. You would think that when delinquencies are increasing like they are now, it's up to about 8%. People are delinquent on the credit cards. You would think that banks would start pulling back, especially considering what happened in the financial crisis. That would make sense, right? Actually, no, because now we're in a completely different world. We're in a world where central banks have promised a lifeline to banks. You think they're going to let these banks just implode and go out of business and watch the economy implode? Of course not. They're going to keep this thing propped up as long as possible. So people looking at 2008, comparing it to now, you have to ask them, why they would think that, because now is a completely different world. Total credit card debt in the U.S., you can see the latest spike here as of the fourth quarter. Does it look like credit limits are being slashed? No. If credit limits were slashed, you would see this debt come down. We did see debt come down a few years ago after 2020. Everything was shut down, basically. If you look at the financial crisis numbers, debt came down for a brief period before banks were reinvigorated with the TARP program, with the Troubled Asset Relief Program, the bailout. And folks, if you think this is going to stop in 2024, I think you're going to be in for a big, big surprise. I think the banks are going to be propped up no matter what. Yes, we're going to see a lot of the regional banks, maybe not a lot, maybe a few, but regional banks will continue to be allowed to fail. And a lot of times what we've seen is just bigger banks buy up the assets of these smaller banks. And even if that didn't happen, all they could do, if they wanted to, they could just print the money and keep whatever bank they want to propped up. So for those that think there has to be some sort of collapse or decline or recession, it doesn't have to happen. Now, something so huge could happen that any sort of propping up would be overridden by fear. So a massive black swan could pop out of, who knows, pop out of the woods here with a nuclear war, um, a major power grid attack. The system goes down for some reason. Maybe we'll get hacked by an enemy country, right? Who knows? Something major would have to derail this money creation, in my opinion, for this to happen, though. Well, let's get back into the numbers here because this is pretty staggering. The credit card debt total is now 1.13 trillion. I had expected it to jump up to about 1.2 trillion, but it looks like a lot of people are having to pull back on certain types of spending, and that's not because they don't have the credit. That's because people are just becoming concerned about the ability or what's their inability to pay these cards back. We do see the default rate now at 8%. Um, Something else here too that caught my eye here. Let's bring this up here. Diners fury. So these people eating at this restaurant are furious, according to this article out of the Sun, as posh London restaurants sell scrambled eggs on toast for $58 pounds, actually. So what's that, about 70 something dollars, US dollars? I don't understand people. Like, why would you be furious? Why not just go to a restaurant that doesn't charge so much? Why are you still going to go to a restaurant and buy something and be furious about the price, but you're still there buying it? Just go to a different restaurant, right? So if it were me, if there were a restaurant down the road charging $200 for a waffle, would I get upset? No, I would actually laugh. It'd be a funny thing because I just wouldn't go there, right? So these articles are pretty silly. I just wanted to point that out though because they're actually writing articles about this, and people are actually mad at the restaurant. So if something costs too much, just don't go there. I had a customer of mine actually talking about his bills going up, but they were all bills that he chose to pay. So, for example, his cable bill went up. He didn't want to go and use a streaming stick or app or get a bunch of apps on a streaming stick instead. He didn't want to use the Fire Stick or any of those things. He continued to pay his cable. His insurance went up. Did he shop around and look for a cheaper company? No, he just paid it. So he called and complained about the price going up, but yet he still ended up paying it. So to me, if you're going to complain, why not actually choose a cheaper alternative? Now let's shift topics a little bit. Some people I hear say, "Yo, JJ, you're talking about the same things. The debt goes up, the debt goes up, the debt goes up." Yeah, because that's what's happening. Debt continues to go up. And that's why you're not seeing the cost of living come down. When debt stops going up or when credit limits are slashed and when banks lessen or lower the amount of money they're loaning out, then you're going to see the correction. So this is my point here. People expecting a correction without looking at the reasons why the prices went up in the first place, are getting some shocking information. So now we've got another rescue coming out here for the student loan crew, or the student loan people. At 40 something million people have student loans right now. So now companies will be able to help students pay off their student loan debt, and it will be pre-tax. So it's similar to like a 401k contribution. So more rescue programs and more shenanigans to help people make their payments. I'm not saying that's a bad thing. I'm just saying that the reason these programs have to come into place is because people can't make it otherwise. We have to have all these different rescue programs. To some people, they say that these are bad because it's going to cause the cost of tuition to go up even more, right? Because if they make it easier for people to pay off their loans, or if they forgive the debt, which is the extreme, then our college is going to drop their prices. No, they're going to raise their prices even more because they know people that will pay even more because they think their debt's going to get eliminated or erased, or they're going to get some sort of assistance with the debt. So nobody's going to balk at the high cost of college if they know they're just going to get bailed out or get assistance to help pay for it. And so this is a recent report here out of 19 News. Your employer can now match your student loan repayments as 401k contributions, right? So very interesting. We're seeing a lot of these programs implemented here to help people stay afloat, so to speak. All right. Most markets in the green here from where I'm looking at today. And I think we're going to continue to see the same until something derails this. It's going to take something big, something massive, though, to derail it. What do you see coming in 2024? Derailment, or it's more of the same? Up and away, cost of living, markets going up. Let me know what you think down in comments, folks. Give us a like and subscribe if you like what we talk about. If you like these reports, we'll keep them coming. And we'll see you next time here on this channel. Bye for now, everybody. Peace.